It is 9:03 a.m. Pacific Standard Time. It's the 5th day of December, 2025. This is episode 1224 of Bitcoin. And Jack Mallers and 21 Capital seems to be going to NASDAQ. That'll be our first story of the day. It's the Bitcoin and podcast. Dude, it's all the news that you can use and more about Bitcoin and the macro environment around which it sits. And the European Union has some say on where Bitcoin sits because it's part of the macroeconomic environment. And they're going to do something that we know they shouldn't do, but we all know why they're going to do it. I will tell you all about it. The CFTC seems to have approved spot crypto trading. We'll dig into that one. And we're also going to dig into the IMF. Yeah, the IMF is twitching with fear. Just even though Lagarde doesn't work there anymore, she's the European Central Bank person. She used to be head of the IMF, and I just picture her at a podium in her fake orange tan, and nobody ever calls her Orange Woman, by the way, but she's got just as bad looking skin as Trump does when it comes to Cheeto color, right? Yeah, I just picture her standing in front of a podium with one eye just twitching, completely unable to say anything because they don't know what to do. So they're grabbing at straws, and that will be the story that I deliver to you right before we run the numbers. Then we're going to run over to talk about LTE, licensing to earn. You thought I had a couple of things to say about intellectual property rights, but wow, oh Nelly, we probably haven't got nothing yet out of me when it comes to how this thing's being turned into just a shit show with a whole bunch of clowns, entertaining us, running around it. JP Morgan will be next up. Strategy's resilience is what they're going to be talking about. So does it mean that they think Strategy is resilient, has been resilient, will be resilient, or is it something else? Well, we'll find out together. And we have words from Gary Gensler, like the ghost of SEC past, bro, opening his mouth and saying stuff about Bitcoin and its relationship to, well, I'll tell you about it. And then we're going to finish up with Russia. But first, Jack Mallers, 21 Capital, wins approval for CEP merger and is now poised for public debut on the NASDAQ Bitcoin magazine, written by Juan Galt. 21 Capital, led by CEO Jack Mallers and Cantor Equity Partners Incorporated, the CEP part of this, announced on the 3rd of December that their shareholders approved the combination of the two businesses, meaning that 21 Capital is set to go public very soon. The vote is expected to have received a lot of attention from retail shareholders as the Mallers. I love it. Okay, let's do that again because it caught me by surprise. The vote is expected to have received a lot of attention from retail shareholders as the Mallers announced it on their podcast to more than 43,000 subscribers and their X with 500,000 followers. The vote took place at the extraordinary general meeting of CEP shareholders who approved the previously announced proposed business combination between the parties, as well as all other proposals related to the business combination. Quote, the final voting results for the meeting will be included in a current report on Form 8K to be filed with the Securities and Exchange Commission by CEP, end quote. Subject to the satisfaction of the other closing conditions described in the CEP's definitive proxy statement and 21's final prospectus, the consummation of the related transactions should take place in the coming days, leading to 21 Capital Incorporated and its Class A common stock. Let's see, hold on. Oh, sorry. I something shiny passed in front of my head and I'm like a bird, man. It's like, oh my God, I got a message. I'm sorry to interrupt you. So let's do that again. 21's final prospectus, the consummation of the related transactions should take place in the coming days, leading to 21 Capital Incorporated and its Class A common stock to start trading on the New York Stock Exchange with the symbol XXI on December the 9th, 2025. The company is expected to exit its quiet period after this point and make a series of announcements about the future of the business. XXI did announce earlier this year that it had received investment from Tether and SoftBank, leading to the purchase of 42,000 Bitcoin, which will position it as one of the largest public owners of the asset and is expected to unlock new financial services offers for Strike customers, which is Jack's growing Bitcoin financial service app and Cash App competitor. Sure, I guess on paper, they're Cash App and Strike are competitors, but I'm pretty sure that Jack Mallers and Jack Dorsey have a pretty warm relationship business-wise. I don't think they're trying to snipe each other. So let's just say that the competition is probably like extending a hand in warm regards between the two Jacks. I love how they called them the Mallers. That's freaking awesome. All right, so 21 Capital going public as part of the CEP, the Cantor Fitzgerald thing. Will they buy? Is this the right environment? You know, we've seen another 3% drop in Bitcoin price today. I'm not sure exactly how that occurred. And what I'm thinking is that we had some inflation report numbers come out today, and honestly, they didn't look bad. I mean, they released at 7 a.m. my time. So what was that? 10? Was it 7? Yeah, 10 o'clock Eastern time. The numbers dropped, and honestly, it kind of suggested that there may be a 25-point basis cut at the Federal Reserve December meeting, and yet we had a 3.7% price drop almost immediately after the news was released. So I'm not exactly sure what happened, but you know, this is just one in a long series of price drops that we've seen. And it all boils down to, well, you know, the macroeconomic environment, but also the digital asset treasury play seems to be losing steam. And I never liked that play in the first place, but it was there. It's still there. You know, it was gaining ahead of steam, and now, so, you know, the question remains, is this the time for 21 Capital to hit the market? And it kind of is, because they've been planning this for a while. They can't control the macro environment around them. They certainly can't control the Bitcoin price. So the only thing left is to see what the stock performance is once it starts trading on the New York Stock Exchange, and we can expect that December the 9th. Let's go across the pond to the European Union, where the EU seeks to transfer all crypto oversight to the European Union bloc's Securities and Market Authority. Yeah, what could possibly go wrong here? Jamie Crawley from CoinDesk is writing, the European Commission, the executive arm of the European Union, has proposed ending individual countries' supervision of cryptocurrency companies and transferring that responsibility to the bloc's markets regulator as part of a measure to fully integrate EU financial markets. So let's just pause and have a moment of silence to the death of sovereignty. For a little while, in the form of cryptocurrency, and I hate saying the word too, but it's the truth, in the form of cryptocurrency, the European Union members at least had that bit of sovereignty. After all the rest of it had been stripped away, and make no mistake, Spain is no longer Spain, France is no longer France. You know, just name your European Union country. They are not that country anymore. Maybe they will be again, but their sovereignty has been completely absconded with, and yet they had this one little door that was still open for them, and that has now been slammed shut by the people of the European Union. They're no longer going to let anybody make any decisions on their own when it comes to this particular industry. I can't imagine why. Can you? Let's continue. The commission wants to address the discrepancies that results from differing supervisory approaches among the 27 member states and transfer oversight to European Securities and Market Authority, the ESMA, as per a Thursday statement. The proposals need to be negotiated with and approved by the European Parliament and European Council. Yeah, I'll bet they just rubber stamped that shit. The move follows reports of concerns that despite the aim of achieving a unified crypto regulatory environment under the Markets and Crypto Asset Regulation, individual countries were diverging too much from ESMA's liking. Oh, Jesus. Uniting oversight of crypto and other financial services under a single body will be more effective, it said. Quote, EU financial markets remain significantly fragmented, small, and lack of competitiveness, missing out on potential economies of scale and efficiency gains, the commission said. I'm going to highlight that and see if I can come back to it. Regulators in individual countries such as France's AMF, Austria's FMA, and Italy's Consob raised concerns and asked ESMA to make tighter control or to take tighter control of MiCA in September. They begged for it. Regulate me harder, daddy. Put a collar on me. Make me walk around on all fours. Degrade me in a way that you will only find in the most fucking hardcore porn. These people are pathetic. Italy, you're pathetic. France, you're pathetic. Austria, you're pathetic. You are pathetic people that want to be collared, want to be leashed, want to be led, want to be told what to do, and it's honestly, quite frankly, fucking disgusting. God, what is wrong with you? What the hell is wrong with you? You know what? Let's go back to this whole thing that I said I wanted to come back to. I want to address this shit right freaking now. Quote, EU financial markets remain fragmented, small, and lack of competitiveness, missing out on potential economies of scale and, wait for it, efficiency gains. I want to link this and lock it in directly to one of the most horrific things that you will ever see, at least in the United States, and that's a feedlot. Do I hate beef? Hell no. Do I hate the cattle industry? Hell no. Do I love the thought of ruminants walking across grass and eating it and pooping out all kinds of good stuff? I absolutely do. Do I think and want people to eat the most densely, highly nutritious food ever in the form of red beef? Hell yes. But a feedlot is one of the most evil things you will ever see. It is bad for people. It is bad for the animals. It's bad for that particular microclimate because of all the poop. Instead of spreading it over hundreds and thousands of acres, it's all concentrated, and it's really, really bad when you concentrate waste in one single place. You know, love is like manure. It's no good unless you spread it around a little bit. And this was all due to efficiency gains. Humans have this innate freaking need to be the most efficient ever, even when that efficiency crosses natural boundaries. And we crossed way across a natural boundary when we figured out how to do confined animal feeding operations, also known as CAFOs, also known as a cattle feedlot. And the same shit is here. When they say you're lacking efficiency gains, what's wrong with fragmentation? What's wrong with local flavors of regulation? What's wrong with, at this point, we are well on our way to having a singular food source for humans, and it's probably going to be labeled Purina Soylent Green. Everybody eats the exact same thing 3 times a day, every day, from the time they're born to the time they die, because by God, that's efficient. right? That efficiency, we need that efficiency. This is I guarantee you this is what's wrong with the world. You will say, no, it's actually the broken money. Ask yourself, why did the money get broke? What attitude was underneath all of this shit? Why do we have strip malls? Because the money's broke. What broke the money? What attitude in humanity allowed the money to break? It's the same attitude that goes behind CAFOs. It's the same attitude that these assholes say, you're missing out on potential economies of scale and efficiency gains. Fuck the efficiencies. We don't need to be more fucking efficient. We're efficiencing ourselves out of the door. We're no longer humans. There's no difference between any of us. We might as well be in a museum of humanity at this point. We're losing everything. We're losing everything it means to be different between each other, between groups of people. It's this notion of efficiency. It's not that you should never try to be efficient. It's that there is a way that you can be so efficient that you've crossed natural boundaries, and that efficiency, those gains that you will keep getting, will start eating into other things, because the universe abhors a vacuum. What you do to one thing will necessarily not only affect another thing that you can't even see at the moment, but will probably consume its energy to make that efficiency gain, except it's so far away that the people getting the gains don't ever see what they're losing on the other end. This notion of taking this last vestige of sovereignty away from the 27 member EU states is abhorrent. And it's not going to end well. Nothing that they've done has ended well. This shit's got to stop. Let's continue with the very last paragraph. ESMA is the EU's closest equivalent to the Securities and Exchange Commission in the US. However, ESMA's role is more one of coordination rather than direct supervision wielded by the SEC. The move to integrate financial markets and transfer direct supervisory competences might be seen as a step toward making the regulator closer to an EU SEC equivalent. Well, of course. Right now, what that paragraph is saying is that at the moment, the people that are being handed the keys to the Bitcoin kingdom in the EU are just a coordination type of group. They will end up calling the shots. If you can get out of the EU, I'd highly recommend, I would consider it, because it's like the largest homeowners association in the world right now. And pretty soon everybody will not be allowed to have any color on their homes, and they will all have the exact same mailboxes, and their lawns must be kept to exactly 1/4 inch in height, and anything else will result in fines. Let's move on to the CFTC approving U.S. spot crypto trading. This is written by Tyler Warner from decrypt.co. The CFTC has formally approved spot crypto trading on CFTC regulated exchanges, a first in the United States. Newly approved rules allow CFTC registered exchanges to list Bitcoin and shitcoin number one markets. And Bitnomial is expected to be the very first venue to launch under the new framework. Until now, spot crypto trading in the United States has lived in a regulatory gray zone. It was supervised indirectly, but never explicitly approved. This is the first time that the CFTC has authorized a federally regulated spot market, and it comes in a hallmark week that included Vanguard and Charles Schwab opening their own doors to spot crypto ETF trading. Quote, for the first time ever, spot crypto can trade on CFTC registered exchanges that have been the gold standard for nearly 100 years, with the customer protections and market integrity that Americans deserve, CFTC Chair Carolyn Pham said. The United States now has the beginnings of a fully regulated spot crypto market, something institutions have been waiting for years. Well, probably not years. They were laughing at us for quite a few years. I think it's only been the last 2 years that they've been waiting, but yeah, 2 is plural, so I guess it fits. So anyway, at the same time, retail investors at Charles Schwab and Vanguard, 2 of the largest brokerages in the country, now have the ability to buy crypto ETFs with the click of just a few buttons. This is what has been accomplished in the past few months. 1, a new regulated trading venue for institutions, and 2, a new distribution channel for retail. It's never been easier to enter the crypto market than it is right now, God forbid. Just buy Bitcoin, people. Now we will see who indeed enters and who all of this plumbing is being built for. Okay, so that's all we really need to know about this. But in the context of this downward slide that we've been getting in the price of Bitcoin, and all the shitcoins are just, by God, talk about getting hammered. They're just, I hope they're all unrecoverable, but no. It's like Jesus said, the dipshits will always be with you. And I don't mean the poor. I actually mean the people that think Sol is a real project that is going to do something. Oh, it was a DeFi. Yeah, it works in DeFi, which is also a scam mechanic too, but you know, you get where I'm coming from. It makes me wonder if the crash of Bitcoin's price from 126,000 to, I think we were at 88,000 just a few minutes ago, when you look at it in the long term, over the past few weeks, since October the 10th, I wonder if that's not engineered because they knew, the people engineering it, they knew that these announcements from Charles Schwab and Vanguard were coming, and that what we just read, that the CFTC has approved spot crypto trading. Because, like, think about it that way. If Charles Schwab and Vanguard and the CFTC all this week, that's what, I mean, these 3 things dropped just this week. This hasn't been going on for like the last 3 weeks. This is just this week. Charles Schwab announced yesterday, Vanguard the day before that, CFTC this morning. So what happens to Bitcoin price if we're approaching $126,000? We're not seeing the downside slide to down 35%. And then this news drops, along with the fact that we now have an elevated chance of a 25 basis point cut from the Federal Reserve this month. What do you think happens to the Bitcoin price? This shit runs, dude. You got to suck some wind out of its sails because you've been sitting there making fun of people for so long that you missed the boat, and now you know this news is going to drop. You better do something quick, pal. You better figure out a way. You better call some people, get them on the phone, and say, we will loan you billions of dollars to short this shit so that we can have an entry position that makes sense for our clients and our customers. I guarantee you that is on the table as a possibility as to what's been going on as of late. I don't think it was just the digital asset treasury companies losing a little bit of steam. I don't think it was just the MNAV going down a little bit on those companies. I don't think it was just the Japanese government bonds hitting an all-time yield, or an all-time yield for the last 30 years or so. I don't think it was just the yen carry trade. I think a whole lot of shit was out there, but I also think that there was some machinations on the backside because they saw these, in particular, these 3 news pieces dropping all in the same week, because that shit would have been rocket fuel had there not been a negative sentiment, fear in the fear index at all-time highs. that would buffer that sentiment. I'm just saying. But it makes me hungry for chocolate. Chocolate, I can get my chocolate at Bitcoin Beans. That's bitcoinbeans.co, not com. Bitcoinbeans.co. They are the newest addition to the family of Circle P vendors. Circle P is where I bring plebs with goods and services just like you to plebs just like you who want to buy those goods and services, but you're going to buy it in Bitcoin, because if you're not selling it in Bitcoin, well, brother, you ain't in the Circle P. Bitcoin Beans. Invest in your health like you invest in Bitcoin. Cacao is a nutrient-dense superfood. It's rich in magnesium, rich in antioxidants, and theobromine for natural energy and mood support. We craft 1 pound blocks of 100% pure cacao grown regeneratively in Colombia and paid for in Bitcoin. No chemicals, no fiat, no middlemen, just real food sourced with integrity and exchanged through proof of work. Bitcoin Beans. Go get your 1 pound block. They work in blocks just like Bitcoin does, right? As one block after another. In fact, their block, the boxing that they use is stamped with the block number. When that particular, I guess, batch. I'm not going to say, because it would be really difficult to say, hey, I put this block in, block of chocolate in this box and look at the mempool. No, that's just too much work. I'm sure that they're just doing it by the batch, but 1 pound blocks of some of the most gorgeous chocolate I have ever seen. They're shipping me a sample so that I can actually taste it, but there's some pictures that I've seen. And since I literally am a chocoholic, I know my chocolate. I do. That's one of the things that I know how to do, is how to judge chocolate. Some of these pictures at least suggest this is probably some of the finest chocolate you will ever have. Bitcoinbeans.co. Go to bitcoinbeans.co. Make sure you use a coupon code. So wherever you can put it when you buy it on the invoice, use Bitcoin and. I think that there's I forgot to prep it. I think there's a discount. I'm not sure. Right now, just use Bitcoin and when you buy from bitcoinbeans.co, because that will let the owner know that I made a sale for him here on the Circle P, and he will be able to get me back on the flip side with some Satoshis, because this is the only place you will hear value for value advertising. Not all of these plebs have the money for an advertising campaign. The Circle P is here for them. I do not charge upfront fees at all for advertising for the people who I think have a really good product. If I make a sale for them, good. If they decide that it was worth something, awesome. If they give me sats on the other side of the sale, icing on the cake. But the Circle P is here to service the plebs that are just trying to start something they love, to start something new, to do something else that could make them money, make them a living, give them joy, give them happiness. That's why the Circle P exists. Go to bitcoinbeans.co. That's bitcoinbeans.co. Make sure you use coupon code Bitcoin and so that they know. Oh, by the way, theobromine, one of the principal active ingredients in chocolate, and one of the things that makes chocolate chocolate. Theo means God. It's literally food of the gods. The Latin American attachment to chocolate is mythic in proportion, and there's a reason for that. If you just thought chocolate was, it's just bad for you and it's just a candy, it's not candy. We think of chocolate completely wrong in this country because we put too much goddamn sugar in it. We've turned it into candy. It's not candy. Chocolate is not only food, it's food of the gods, and it's good for your soul. Bitcoinbeans.co. Go there right now. Bitcoinbeans.co. Pay for 1 pound of chocolate in Bitcoin. On to stablecoins. could erode central bank control. Oh my God, whines the IMF, Atlas21.com writing. As noted by the International Monetary Fund in a recent report, stablecoins offer an opportunity to expand access to financial services for millions, but they could also undermine the authority of central banks. Really? Who gave you that authority? That authority comes from the people. It really does. And once we realize that and take our authority back, as long as our apathy reigns, then these central banks will think that they have the authority. It's really our authority. Question is, are we just going to continue to be chicken shits? Anyway, the 56-page document published December the 4th by the International Organization highlights currency substitution as one of the main risks associated with the spread of stablecoins. This phenomenon could gradually compromise the financial independence of many states, the IMF cried. The institution emphasized that the use of stablecoins denominated in foreign currencies, especially in cross-border transactions, could trigger currency substitution dynamics and potentially undermine the sovereignty of national authorities, not of nations. Notice that language, not of nations, but the sovereignty of national authorities, particularly when non-custodial wallets are used. When a significant portion of economic activity shifts from the national currency to digital alternatives, central banks lose effectiveness in managing domestic liquidity and settling interest rates. The global financial institution argued that. Well, I'm sorry that you're arguing that. It's time for us to rise up, people. The report also notes that if foreign currency stablecoins gain traction through payment services, local solutions such as central bank digital currencies could struggle to compete. Oh, good. I hope you fucking die. The organization found that regions such as Africa, the Middle East, Latin America, and the Caribbean are seeing significant growth in stablecoin adoption compared to traditional foreign currency deposits, instruments that central banks used to influence monetary policy. I told you to look at Latin America, the Middle East, and Africa. If they had been listening to my show 4 years ago, they would have heard the same message. They're just now figuring it out. These people are so fucking slow. It's pathetic. To safeguard the national monetary independence, the International Monetary Fund recommends that governments implement regulations preventing digital assets from being recognized as official currency or legal tender for that matter. Such recognition would compel people to accept digital assets as a form of payment, the institution stated. Pausing to say this. You see your death before you, and I could not be more pleased. In November, the European Central Bank published an article highlighting the risks associated with dollar-denominated stablecoins, emphasizing how they could absorb resources from the traditional financial system. Quote, significant growth in stablecoins could cause retail deposit outflows, diminishing an important source of funding for banks and leaving them with more volatile funding overall, the European Central Bank stated. Again, you see your death before you, and I could not be more pleased. Let's run the numbers. CNBC Futures and Commodities is here to tell you what you need to know. Energy is booming this morning. Brent North Sea is up over a point to 63.92 a barrel. West Texas Intermediate just at a point, breaking the $60 plane for the first time in weeks, it seems. $60.25. Natural gas, holy crap. We've got a polar vortex that's drifting down from the Arctic here in the United States. The news has been reporting that anyway. And natural gas is reacting accordingly. It is up 7 just popped to 7.4%, $5.43 per thousand cubic feet. Ladies and gentlemen, that is about half of natural gas's all-time high peak. Half. Murban crude is 0.86% to the upside, and gasoline is up 0.7% to $1.84 a gallon. Shiny metal rocks having a good day as well. Palladium up a point, but gold is basically sideways, 0.08% to the upside. That's $4,245.05. Platinum is barely moving, but still in the green. Silver is up 2.7%, just below $60. Copper is up 1 1/3. Ag is mostly in the red today, except for our good friend chocolate. You remember chocolate? I just talked all about chocolate. It is up 3.97% this morning. Everything else is in the red, and the biggest loser for all of those guys is coffee. Coffee not doing well against chocolate, and coffee and chocolate make one hell of a good combination. 1 1/3% to the downside for the poisonous bean. Live cattle up a quarter, lean hogs up 1. Feeder cattle is up a quarter as well. S&P is up 0.1%. NASDAQ is up a quarter. The Dow is up 0.11%. And the S&P Mini is barely moved 0.01% to the upside. And now I'm looking at $88,970. We're back to a $1.78 trillion market cap. We can only get 21 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,957,741.79 of. And average fees per block are, well, average 0.03 BTC taken in fees on a per block basis. Looks like, 29 blocks carrying 58,000 unconfirmed transactions waiting to clear at 4 sats per VByte. Low priorities costing 1. Hash rate is down a little bit. We're at 1.02 zettahashes per second. I've got enough of a graph on mempool.space to say definitively that there is a decline in hash rate, but yet we are still at 1.02 zettahashes per second. We could be at 500 exahashes per second, and it still wouldn't faze me, other than the fact that it means a whole bunch of miners are kicking out. But we are seeing some minor capitulation as far as hash rate is concerned. I did see a report somewhere this morning that said that miners seem to be selling a little bit more as of late. I don't know. We'll it's a long game, y'all. We'll have to stay to the end. From Chuck E. Schwab's yesterday's episode of Bitcoin, and I got 100 sats from Nakaz18 says live aloha. Spitball Marksman with 2170 sats says great show. Nick Dose with 115 says cheers. So cheers right back at you. Pies with 121 sats and a whole bunch of emojis I can't read, and you know why. Jason High with 200 says, why was the mushroom? Oh no, that was from yesterday. So I only got a few boostergrams this morning. Come on, guys, step it up. I'm starving over here. Somebody's got to feed my chicken wing addiction. That's the weather report. Welcome to part 2 of the news that you can use. Licensing to earn. Man, this is probably going to send me on a rant. If I do get into one, my apologies before it even starts, but Ais Karaman from Cointelegraph has this headline. Licensing to earn protocol turns intellectual property rights into real-world assets. Again, I ask, before we proceed, what could possibly go wrong? Wow. BeatSwap, a full stack infrastructure that brings intellectual property rights on chain, recently launched its first platform. Royalties are how artists and creators live off their work, but what should flow like a steady stream often turns into a trickle by the time it reaches them. Intellectual property, or IP, makes its way to the audience through intermediaries in traditional markets. At each step, a cut is taken under long contracts with dense legal language that are difficult for creators to track or compare. By the time payments make their rounds, much of the value their work generated has already slipped elsewhere, buried in splits and figures the creator never sees in full. Such a system has its downsides for consumers as well. Web3 platform BeatSwap presents a blockchain-based solution, yeehaw, that removes the middlemen from the process and puts both creators and audience in the driver's seat of the creator economy. Okay, right now I want to say one thing. Bitcoin, nostr, and podcasting 2.0. And yes, you'll go, what about video? Dude, just consider like all recorded media, both audio and video, underneath the umbrella of podcasting 2.0 and just go with it. Okay, just trust me, just go with it. Yes, you can split hairs. But when I say podcasting 2.0, I mean all of that. Audio only, video only, pictures, memes, like whole video, whatever you can think of, songs. We've already been doing this shit with nostr and P2P value. I do it with value for value advertising. I do it. This whole podcast is based on value for value. If you get value out of it, you give me boostograms or find some other way to help fund the show. Right? We're already doing this. I don't need my intellectual property represented for me on a fucking blockchain. This is ridiculous already. We already have everything that we need to do this. This is just a layer of abstraction that is not helping anybody do anything. But BeatSwap, being the full stack Web3 infrastructure that it is, allows creators to register and tokenize IP rights through its RWA launcher architecture. These real world assets enable owners to receive royalties from the tokenized work without any intermediary involved. And again, I say we already have this. Unlike non-fungible tokens, a widespread method for tokenizing intellectual property, RWAs, real world assets, can be fractionalized. Well, this means both the creator and the fans can have a stake in the IP and gain a right to its appreciation and revenue stream. Alongside the royalties paid out in USDT or Tether, participants also receive some other shitcoin, the ecosystem's native token. I guess that's the BTX they're talking about. It's a shitcoin. Though the licensing to earn mechanism, or through the licensing to earn mechanism, adding an additional layer of rewards. And I'm saying an additional layer of stupid. BeatSwap utilizes decentralized physical network, or DPIN, infrastructures to track usage data and takes monthly snapshots to determine distributions. Constant on-chain records allow all parties to gain a transparent view of how each work is used, how much revenue it generates, and how royalty payments are shared. Yay, yay. The architecture that integrates the ecosystem's licensing system with the snapshot mechanism recently went live on OPBNB, a layer 2 solution built on BNB chain. This licensing to earn framework distributes these shitty ass BTX tokens based on verified usage data. How can I verify that? This marks the first step toward BeatSwap becoming a fully decentralized marketplace for the creator economy. Visibility is a major problem or concern that pushes creators to work with intermediaries, and BeatSwap develops a Web3 native solution to provide creators and artists with a place to showcase their work. The upcoming solution, called Space, is a social media platform because we can't come up with anything new where creators can launch personalized spaces. Does this sound like MySpace to you? It does to me. It displays their licensed IPs. Oh, okay. Their licensed IPs. Who's licensed? Your license? What are you getting off the top? This is bullshit. Nobody needs any of this, and it needs to die. All right. Enough of that. let's get onto this one. JP Morgan says strategy's resilience is key to Bitcoin's price direction, at least in the near term. Yogiti Khatri from The Block is writing this one. Strategy's resilience matters more for Bitcoin's near-term price outlook than miner activity, according to JP Morgan analysts. That's despite the fact that the world's largest Bitcoin holder has yet to sell any Bitcoin and what appears to be an increasing sell pressure from Bitcoin miners. Remember, I was saying that I had found an article about that. Well, that's where that's coming from. Bitcoin's price has remained under pressure recently because of two factors, according to the JP Morgan, an analyst anyway, led by managing director Nikalos. There's no way I can pronounce this name. It's Greek and it's very long, and I'm not going to pronounce it. So let's just call him Nicholas. Said in a Wednesday report, those factors include the recent decline in the Bitcoin network hash rate and mining difficulty, and the developments around strategy. Let's pause here just to say there hasn't been that much of a decline in the Bitcoin network hash rate. We got up to a row of sticks, 1.11 exahashes per second, or God, what is it? Whatever. The big one. I can't remember. My brain's not working. You know what I mean. And then it's fallen to 0.01 or 0.02 this morning. Well, guys, I mean, just weeks ago, was it like, 800 exahashes per second? And then it was 900 exahashes per second. And then we got into the, terahash. Then we got into the terahash range. Was it terahash? Oh my God. Hold on for a second. This is driving me up the wall. And I got to go check. Oh my God. I'm almost there, I promise. Zettahash, not terahash, zettahash. And now it's at 1.02 zettahashes per second. There's not that much decline, y'all. So I think that's a little bit of a red herring. But Bitcoin's price has remained under pressure recently because of those factors, according to these analysts. And the decline in hash rate and mining difficulty reflects two forces. China has reiterated its ban on Bitcoin mining after a surge in private mining activity and high-cost miners outside China retreating as lower prices and elevated energy costs squeeze profitability. Let's look at that. China reiterating its ban on Bitcoin mining. What it was really reiterating was China's ban on Bitcoin trading. It was really about the trading. They put mining in there just because they always did, but it wasn't a reiteration of the mining ban. It was that they had a bunch of Chinese traders that were really ramping up their trading in cryptocurrency, and that's what pissed off the People's Bank of China. And so clearly the president of China followed suit, and the rest of the administration did too, and they've reiterated. But it wasn't centered around Bitcoin mining. It was about trading. Let's be very clear about that. So, while ordinarily a drop in hash rate boosts miner revenue, the analyst said, quote, the Bitcoin price continues to hover below its production cost, leading to sell pressure on the first and largest cryptocurrency. And this is where it gets funny. The JP Morgan analysts now estimate Bitcoin's production cost at $90,000 per, which was down from $94,000 last month. The updated estimate assumes electricity at 5 cents per kilowatt hour, with each 1 cent per kilowatt hour increase raising production costs by $18,000 for higher cost producers, the analyst estimates. Let's pause one more time to call bullshit on this $90,000 per Bitcoin production number. It is not costing $90,000 per Bitcoin to mine a Bitcoin. For some miners, maybe. For other miners, definitely not. This is a bogus number. Now, what the true number is very difficult for anybody to wrap their heads around, but it is way less than $90,000 per Bitcoin. So no, Virginia, it is not true that the Bitcoin mined and sold at $88,970, like the price is, hovering around right now, is not going to incur a loss on your production of that same Bitcoin. That is not true. It's true for some, a few, probably a hand, maybe a couple. But for the majority, no, this is not true. This is what drives me crazy about these, quote, analysts at JP Morgan. But they go on. Quote, as profits get squeezed amid elevated electricity costs and lower Bitcoin price, certain high-cost miners have been forced to sell Bitcoin in recent weeks, according to JP Morgan's report. Even so, the analyst said miners are not the main driver of Bitcoin's next move. Instead, they pointed to strategy and their balance sheet and its ability to avoid selling Bitcoin. Strategy's enterprise value to Bitcoin holdings ratio, calculated as the combined market value of its debt, preferreds, and equity, divided by the market value of its Bitcoin, currently stands at 1.13. That's the MNAV. After declining sharply in the second half of this year, the analyst said. The fact that it remains safely above 1 is, quote, encouraging, because it signals that Strategy is unlikely to face pressure to sell Bitcoin to meet dividend or interest obligations. Quote, if this ratio stays above 1 and MicroStrategy can eventually avoid selling Bitcoin, markets will likely be reassured and the worst for Bitcoin prices will likely be behind us, the analyst said. They also highlighted Strategy's recent creation of a $1.44 billion reserve, saying that the fund would cover up to 2 years of dividend and interest payments. It's more like 1.5 years, but whatever. This reserve further reduces the likelihood of forced Bitcoin sales in the foreseeable future, they said, helping stabilize Bitcoin's outlook. Strategy recently slowed its accumulation of Bitcoin, including 1 week that may have passed without any new buys. However, the firm is still building its treasury and announced earlier this week that they are at 650,000 BTC. Markets are now watching whether MSCI will remove Strategy and other digital asset treasury companies from its equity indices. JP Morgan said the impact would likely be asymmetric. A removal decision would have limited downside, the analyst said, because the risk is already more than priced in. Since October the 10th, when MSCI first announced its consultation, Strategy's share price fell 40% through December the 2nd, underperforming Bitcoin by 20%, or roughly $18 billion in market value. The scale of that underperformance suggests that markets have already priced in exclusion from MSCI and potentially from all major equity indices, according to the analysts. Last month, the analyst estimated that MSCI exclusion would induce $2.8 billion in outflows from Strategy and $8.8 billion if all other equity indices were to follow suit. At the same time, Strategy's co-founder and executive chairman Michael Saylor said, quote, index classification doesn't define us. Our strategy is long-term. Our conviction in Bitcoin is unwavering, end quote. The analyst said MSCI's pending January 15th decision will be important for Strategy and for Bitcoin's trajectory, but reiterated that a negative decision would likely have limited additional downside. By contrast, if MSCI keeps Strategy in its indices, the analyst said both Strategy and Bitcoin will likely rebound strongly toward their pre-October 10th levels, before what became the largest crypto liquidation event in history. The analyst said if Bitcoin's price falls below its revised production cost estimate of $90,000 and stays there for an extended period, as it did in 2018, more miners would come under pressure, potentially pushing production cost estimates even lower. Production cost has historically acted as the soft floor or the support level, according to the analyst. Still, they reiterated Bitcoin's longer-term upside. Their volatility-adjusted comparison of Bitcoin to gold continues to imply a theoretical Bitcoin price of close to $170,000, suggesting significant appreciation over the next 6 to 12 months if market conditions stabilize. Bitcoin is currently trading at around 92,340. No, not right now. We already saw that, but you get the gist. So JP Morgan analysts out there are basically doing a couple of things. One, they're getting the price of production wrong and they're using it as FUD, or at least it's acting as FUD. And the second is they're pinning all of Bitcoin's hopes on Michael Saylor's strategy. And that is a bullshit mechanic. Bitcoin was here long before Michael Saylor we even knew his name, and it will be here long after we forget his name. If we do forget it, I mean, it's possible that he's just stays in the game and it ends up being a fixture. Who knows? It doesn't really matter either way. We got here all by ourselves. We really didn't need strategy. We didn't really need BlackRock. We don't really need any of this bullshit. The only thing that Bitcoin actually requires is ridiculous amounts of money printing and terrible economic policies around the world. And honey, I don't see that shit changing anytime soon. Let's move on to Gary Gensler and the ghost of SEC past. Ex-SEC chair reiterates, Bitcoin is different than other crypto. Bitcoin News, written by Nima. Former SEC Chairman Gary Gensler has once again emphasized his view that most cryptocurrencies are risky. In a recent Bloomberg interview, he said Bitcoin is treated differently from other digital coins. While Bitcoin is still volatile, he believes it has more credibility as a stronger standing compared to thousands of alternative tokens. Gensler explained that the crypto market is full of speculation and described most tokens as highly speculative, volatile assets, meaning prices often move based on hype rather than any perceived real value. He said Bitcoin is closer to a commodity, similar to gold, while most other tokens do not provide dividends, earnings, or any regular returns, as he put it. Quote, putting aside Bitcoin for a minute, all the thousands of other tokens, not the stablecoins that are backed by US dollars, but all the thousands of their tokens, you have to ask yourself, what's the fundamentals? What's underlying it? End quote. His message to investors was simple: be careful and understand the risks. He repeated that thousands of cryptocurrencies have weak fundamentals and people should think carefully before investing. And he noted, quote, the investing public just needs to be aware of those risks, end quote. Bitcoin stands apart, according to Gensler, because it has been more widely accepted and better understood by regulators, unlike most other assets in the digital asset industry. Gensler's comments came at a time of major change in the industry. One of the biggest developments was Vanguard reversing its long-standing anti-Bitcoin policy. The market reacted very quickly. Bitcoin jumped around 6% as trading began, and trading volume in Bitcoin ETFs reportedly reached 1 billion, an event nicknamed the Vanguard effect by Bloomberg analysts. Yeah. You're giving a little too much weight to their pal, but whatever. Gensler noted that, quote, ever since antiquity. Okay. This sounds like a sophomore college term paper. Since the beginning of time, since before history began. You don't start your papers that way, boys and girls. It's trite. It's just garbage. But whatever. Ever since antiquity, finance goes towards centralization. Even when systems start out decentralized, he said that it's not surprising that Bitcoin is slowly becoming part of the traditional financial system through ETFs, similar to how investors can trade gold and silver through exchange-traded funds. And some people believe digital assets have become a political issue, especially with public attention involving, my God, the Trump family. But Gensler disagrees. He said this is not about Democrats versus Republicans. It is about fairness and transparency in financial markets. Quote, when you buy and sell a stock or a bond, you want to get various information and the same treatment as the big investors, he said. He argued that fair access to information is the fairness that underpins U.S. capital markets, end quote. Across interviews and news reports, Gensler's message stays the same. Bitcoin stands apart, but the crypto market is still risky. He believes most tokens have weak fundamentals and depend too heavily on speculation and hype. Bitcoin may be the only exception in his view, but even that remains volatile. So from beyond the grave of the SEC chair, and no, Gensler's not dead, but his chairmanship definitely is, we get the same message. Bitcoin is different. And even Gensler still says that. And he's Absolutely correct. Now on to Russia, where VTB pushes to open Russia's first bank-run Bitcoin trading desk as Kremlin moves to classify mining as an export. And that's the most important part about this particular piece from Bitcoin Magazine, written by Micah Zimmerman. Russia's second largest lender, VTB, is positioning itself to become the first major bank in the country to let customers trade Bitcoin and crypto directly. Andrei Yatskov, head of VTB's brokerage arm, told Russian outlet RBC that client demand for real crypto, not just derivative products, is rising sharply. Quote, as we see it, real cryptocurrency will be available for purchase via our brokerage accounts, he said, according to DLN News reporting. The move comes despite the fact that crypto trading remains unregulated in Russia, and for now, banks can only offer crypto-linked derivatives, a permission granted earlier this year to VTB's rival Sberbank and the Moscow Exchange. But momentum in Moscow has turned. After years of pushing for a full ban, the central bank has recently signaled it is ready to regulate crypto instead, reflecting mounting pressure from lawmakers, ministries, and businesses eager for a legal framework and that goody tax revenue. VTB plans to test its trading platform with super qualified clients, which are those that hold over $1.3 million in assets or earning more than $649,000 per year. The commercial banks now see themselves playing a central role in a future market of licensed crypto brokers and depositories. Yatskov said clear rules would definitely boost transparency and confirmed VTB intends to participate once regulations are finalized. Crypto is already finding new footholds in Russia, from cross-border payments to rapidly expanding industrial mining sectors. The tide is turning. VTB aims to launch full crypto trading services as early as 2026. Earlier this year, the Bank of Russia reportedly starting allowing domestic banks to conduct limited crypto operations under tight regulatory oversight. Quote, we hold conservative views and think about how appropriate it is for the banking sector to include cryptocurrency in its assets, said Vladimir Chistchuskin, the first deputy chairman. In the meantime, a senior Kremlin official is saying that Russia should treat crypto mining as a formal export sector, arguing that large volumes of mined Bitcoin effectively leave the country's economy even without crossing a physical border. Speaking at the Russia Calling Investment Forum, Maxim Orshkin, chief deputy of staff to President Vladimir Putin, said crypto flows are enormous, yet absent from official statistics, despite influencing the foreign exchange market and Russia's balance of payments. Russia's legalized industrial crypto mining in 2024, and Orshkin described the sector as a new and undervalued export item that the state fails to properly measure. And because Russian firms increasingly settle import bills with cryptocurrency, those transactions should be counted in the nation's trade and currency calculations, he said. Industry executives say the scale justifies the shift. Via Numerai Group CEO Oleg Izhenko estimates Russian miners will produce tens of thousands of BTC this year. Sergei Bezdalov, head of the Industrial Mining Association, put output at roughly 55,000 BTC in 2023 and 35,000 in 2024. Regulators have tightened oversight as this sector expands, and companies and sole proprietors must register with the Federal Tax Service. Hosting providers are tracked in a dedicated registry, and miners face corporate tax rates as high as 25%. Household miners do remain exempt from registration only if their power consumption stays under 6,000 kilowatts per month, kilowatt hours per month. The push to formalize the industry comes as authorities crack down on illegal operations that siphon electricity or evade taxes. Losses, officials say, run into the millions. But with Russia now the world's number 2 Bitcoin mining nation, pressure is mounting for Moscow to integrate the fast-growing sector into its national accounts. So this is an interesting turn of events. And again, it has nothing to do with VTB, wanting to trade crypto. This is more about the fact that these people are looking at Bitcoin mining as an export. And they're going to do it, by the way. This isn't just going to be something like a flash in a pan and then we all forget all about it. They want those numbers. And honestly, is the question that I have now because of that, is the United States looking at Bitcoin production inside our borders also as an export? I have heard nothing about it. I've been doing this show for well over 7 years, and not once, especially since, we started getting a little bit friendlier and, especially in Texas, where it's become sort of like a mining hub for Bitcoin. I haven't heard a single word about whether or not we are considering Bitcoin as an export. So if we haven't, then Russia's lead here might actually change the scope and nature of how other sovereign nations look at their Bitcoin mining infrastructure. Because honestly, I think that Russia's kind of onto something. I'm not going to say that it's positive, but I'm also not going to say that it's negative. I'm just going to say that it seems to be an important number that seems to be flying under the radar for sovereign nations that are wishing to engage in this. And if they were actually running the numbers on what this means to their exports, they might find themselves in a much better position to call shots against other nations. So that's all I got for you this morning. It is Friday, so I will not be coming to you over the weekend as normal. If you would, please boost the show. And if you can't do that, if you just don't have any money, give me a 5-star review on Apple podcast reviews, because it really does help. I mean, a lot of people say that it doesn't do a damn thing. They're wrong. It actually does. It engages algorithms. It does all that stuff. And we may hate it or love it or be neutral about it. It is a thing, and I've got to figure out a way to do that. And I can only rely upon you, my listeners, to kind of help me out with that. And if you don't, like I said, if you don't have any money, if you give me a little bit of your time, give me a 5-star review on Apple Reviews. It really does boost the reach of this particular podcast, and I want to see those numbers continue to rise. I hope you have a wonderful weekend, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.